Sure. And, it may be difficult for a plan sponsor to explain something like revenue sharing to their employees. So how could a plan sponsor avoid these types of questions?
Keep it simple. One of the things that we have been advising record keepers and other service providers to do throughout is to deliver these disclosures in the language of the participant and not the language of the industry. Words like revenue sharing, 12B1 fees, sub-transfer agent fees, those words have virtually no meaning, and I think will create chaos in the minds of participants who try to understand them. They're inherently complex. And not only are they unfamiliar with them, but you try to explain what revenue sharing is to somebody who's working on the line or somebody who's in charge of sales in the company. I mean, it's just not reasonable. So our view is that we reduce things to a simple presentation of dollars and cents. You're paying X number of dollars for record keeping. The fact that it's being paid for by a revenue sharing arrangement, one could put in a footnote in the back of the statement, as opposed to having a line item on page 1 of a statement saying revenue sharing. So it's all in the presentation and focusing on what the participant is familiar with and can reasonably be expected to understand. And I think that's probably the best bet for a plan sponsor, is to get with the record keeper, have a preview in enough time to make corrections of what kinds of disclosures they're planning to put together so that one can edit that. I think it's really important that plan sponsors do a preview in enough time to be able to comply with the regulations after making amendments and adjustments to the to the disclosure.
Okay. So with the goal here being for everyone to see what the costs are, both plan sponsor and participants, specifically for the plan sponsor, how do they determine if the costs are reasonable?
There are a number of steps that I think a plan sponsor should take in response to the costs that they discover. The very first one, however, is to determine what features of the plan are essential to them. The way the industry has evolved, there are a host of features that are available on a plan that plan sponsors don't particularly need or use. So the first step is to identify what are those features that are essential. And then after doing that, determine what level of service they're interested in. What level of service is meaningful to them. After sort of getting those parameters, the next thing to do is to look at, okay, for these essential services, not necessarily all the services in the plan, but for these essential services at this level, what is a comparable cost in a comparable organization? And that comparable cost we see as being obtained in a couple of ways. One is there are services that provide that data today that one could subscribe to. But one could also go to the service provider and determine within all of the plans that you service, where do I rank with my plan? Is my plan a typical plan, a high-cost plan, or a low-cost plan? And the reason I raise that is that that's a relatively easy step to take without having to go obtain data from a third party to check on it. If one finds that one's plan is in the most expensive group within that particular provider, then it may be worthwhile to take the next step and look outside for other data.
Okay. Okay. Well, Lou, thank you very much for answering those questions. I can see we've got a lot of people here that want to ask some questions as well. So I'm going to go ahead and open up the phone lines to everyone. So if you want to ask Lou a question, please state your name and organization, and go ahead and give Lou a question. Oh, okay.
My name is Tim Wood. I'm with Deschutes Investment Advisors in Portland, Oregon. I have a couple questions. First, I think you answered this, Lou, previously, but it occurred. A second question occurred to me, which was, how does it? It seems to me that with the onus being on the plan sponsor to make sure they're getting reliable data, if they can't possibly know, don't they always have to? Wouldn't they have to annually submit with their 5500 form saying, we don't think we got all the information? Because you made that case that the only way to get within a safe harbor and avoid being sued by the DOL, if in fact they didn't receive some material piece of information, is essentially to report their plan providers as being not complying with the law.
That is correct. However, that's not all they're required to do in order to get the exemption. They're also required to take action, i.e., go back to the plan provider and insist that they get it, or ultimately replace the plan provider. So it's not a recurring kind of thing. It's a sort of thing where there's the opportunity that the plan provider has, the service provider has to correct it, but ultimately they would have that exemption will run out. It's not perpetual.
Oh, so that's just for the current plan year.
Yeah.
Okay. Yeah, because I'm just seeing how this could be a really big deal for people. I mean, we've been fee-only investment fiduciaries, and we've been disclosing costs on our statements every quarter, for years. But how do you, if you're a plan sponsor who's always been dealing with a provider that has been just reducing return and essentially telling you that there's no expense, and all of a sudden they're telling you expense, how could you possibly trust them in any given year that you're actually getting the right information?
That is the issue of trust is certainly one that is I think really going to be key here, because if the presentation of these fees isn't clear and obvious, then I think that the issue of trust is going to run wild. We've had some discussions with folks who explain that, look, we're just going to provide 500 pages of every possible cost that could exist in a plan. And my argument there is simply, what does that do for the plan sponsor? Does that encourage the plan sponsor to have faith and trust in you when, for purposes of telling you what plan costs are, they hand you, hundreds of pages of data that you have to go assimilate? So I think you're right on there, that there is that issue of trust, and it's incumbent on every service provider to get out ahead of that. Reach out to plan sponsors, explain to them what the new regulations are, and they call for a different display of the information.
I have two quick questions, then I'll let someone else talk. First of all, I didn't catch who you represent, Lou.
Oh, I'm with Dalbar in Boston.
Thank you. And then my follow-up question is, with the way we itemize our costs for our services, there's some cost for employee advice, there's some cost for us being the 330 investment fiduciary, and there's some cost for doing the rest of the administrative work. On the description of services, do we have to itemize all those things, or could we just put in, because we're already disclosing our costs, right? Can we just put in, Deschutes Investment Advisors for this fee, or do you have to say, being the investment fiduciary was this much, employee advice was this much, and you know what I'm saying?
Yes, I do. There are three categories that are discussed through the regulations, and I would say the very minimum would want to have your fees in those categories, right? The investment management fee is one. The administrative costs or another, and then the third are the direct costs to the participant. So at the very least, we would want to have those particular items laid out. The only other guidance I would give you is, regardless of what the fees really cover, make sure that the presentation is in simple Dick and Jane English. So, you know, you have words like hardship withdrawal. You know, if somebody has had a hardship withdrawal and you're doing the administration of the plan, and that's one of the costs the participant has, sure, there's no harm in showing the fact that they have a hardship withdrawal. If it's an allocation for filing costs for a 5500, I wouldn't put that on a participant. I wouldn't put that level of detail on a participant display. So I think the guideline really has to be audience oriented.
Thank you so much. I'll just listen now.
Okay.
All right. Anybody else with questions? Okay. Well, all right. Lou, thank you very much for your time. Thank you, everybody, for attending today. We'll be continuing our bi-weekly series of educational webinars, and you can check out information on the next webinar and upcoming webinars in the future at www.investandretire.com. Once again, I'd like to thank our special guest speaker today, Lou Harvey, and thank you, everybody, for attending today.
Goodbye, thank you.